It's a country made up of thousands of tropical islands, but tourism lags behind its neighbours. Will a new fun slogan bring people to the Philippines? All next week, CNN focuses on the challenges and possibilities facing this emerging economy. See how Filipino sailors are preparing to protect themselves from pirates. And find out why many people here have found a new calling. Join CNN's Anna Coren for Eye on the Philippines, all next week in World Report.
The BRICS, they're so yesterday. Instead of Brazil, Russia, India, and China, invest in Turkey, Indonesia, and what was once known as a sick man of Asia, the Philippines. So says Morgan Stanley Investment Management's global head of emerging markets and equities, Ruchir Sharma. He calls them the next breakout nations, countries that can sustain fast growth and meet or beat expectations. His thesis rests on the expectations game.
The way that you define breakout nations is that they need to beat expectations. And they need to do much better than their own sort of peer group in terms of, their own income class. Now, the problem that some of these markets have is that expectations of them came to be too high. So if China, the parallel that I use is like Usain Bolt, which is that when China sort of goes out there, you expect it to sprint and to win by a huge distance.
Compare that to Turkey, Indonesia, and the Philippines, a group I'm going to christen the TIP. Sharma says the TIPs carry reasonable expectations. He calculates that based on their average per capita incomes, Indonesia and the Philippines need to grow 5% or more, for Turkey at least 4%. According to the IMF, Indonesia and the Philippines will miss those targets this year and next, but should hit them by 2017. Turkey, by contrast, is already above those targets and could rev up even more. So he might want to pick up Turkey before it breaks out and doubles its growth rate by 2017. Besides, according to StarMine data, it's relatively cheap. By contrast, the Philippines and Indonesia trade at more than 15 times earnings. Only iShares sells funds focused on Turkey and the Philippines. Its Turkey fund scores well for its strong returns and low fees, but those returns are volatile. For Indonesia, Lipper recommends Market Vector's Indonesia Index ETF for its strong, steady returns and low fees. Finally, the guru of emerging markets, Franklin Templeton's Mark Mobius, says he agrees with Sharma's tip picks, but says frontier.
Throughout the Asia-Pacific region, most businesses are quite optimistic going forward. It's
now,
a very good reading.
When you break down this survey, it gets quite interesting. The Philippines was the most positive country with an index reading of 100. Is business booming there?
Absolutely. I think that there is something happening in the Philippines. It has been quite positive for the past few observations. And I think that if you look at the data, there is a good reason to think that this is not just some crazy optimism. Indeed, the Philippines has been growing at about 5%. We expect it to grow again 5% this year. The first quarter was amazing. Inflation seems to be under control. The peso is appreciating. The stock market has been going up, so we have about 13% return year to date. So I think that this optimism is backed by solid economic data, at least so far. And we might be up for a very positive surprise in the near future.
I'm David Ingles with your Global Outlook for Wednesday, September 26. In this daily segment, we'll be taking a look at strategic investment ideas and, of course, expanding it with Bloomberg's latest analysis. Today, as Rich did point out, we'll take a look at an economy that has really been, for many years overlooked by a lot of global investors. The Philippines, it's been one of the most promising economies, economic stories in Asia this year. We'll examine the different positive dynamics at work here, and where, of course, most importantly, you could make money. Now, economic growth has been very encouraging in 2012. It has been one of the best performing economies in Asia so far. In fact, in the first quarter, 6.3%, second only to China. We both have, of course, exports and consumption both proving very resilient amidst all of these economic headwinds. Q2, close to 6% growth. Not shabby here, as you can see. Now, a lot of praise, as Rich did also allude to earlier, has been directed at the current leadership under President Benigno Aquino, his efforts at fighting corruption, shoring up the country's finances, and of course boosting the country's profile among the global investment community. Now, take a look at what ANZ and how they put it. What Aquino has done, quote unquote, so far has been appreciated by the market, and people are aware that it's much cleaner politics in the Philippines this time around. Let's take a look at the currency and the bond markets now, sort of the other asset classes, what analysts are saying, and where, of course, you could make your money. The peso, for example, one of, well, Asia's best performing currency this year, and at this point, the only one in emerging market Asia where forecasters have in fact become more bullish on. Now, the median estimate is for a further 0.2% advance on top of the 4.5% gain so far year to date since January that we have seen. 41.85. In fact, the most optimistic of forecasts put this at 4.2% appreciation by December. Asking at this point, what is helping support the currency? Well, for one, it's the remittances rising 5.5%. Into July, close to $12 billion so far. The central bank, Bangko Sentral ng Pilipinas, expects this to top $21 billion by year end. In fact, in BNP Paribas' view, they do expect the peso to outperform. Near-term outlook is solid, reflecting the solid balance of payment surplus and, of course, the demand for Philippine assets. Now, directly related, of course, to the move up the rating scale for any country is the bond market. The Philippine fixed income market has returned over 12% so far this year. That's the second best performing fixed income market. That is according to HSBC. Pictet Asset Management favors Philippine sovereign bonds over another of Southeast Asia's promising economies, Indonesia. They say, quote unquote, Philippine remittances and fiscal, the position of the country remain very strong. The Philippines travels at a slightly more positive pace than Indonesia. Not a bad comparison there as well. So this one, economy, of course, definitely worth watching over the medium to longer term. And that is your global outlook for today. I'm David Ingles.
When we started out, I can honestly say that for the first 3 months, we were really looking forward to Friday evening, because there would be a break before the rediscovery of all of the problems that were bequeathed to us. I started out in public service in 1998 after the Asian financial crisis of 97, and the constant refrain was, we don't have money, we don't have money, we don't have money. Now, last year we were being criticized that we had the money and we weren't spending it quickly enough. And I think that's just such a turnaround in roughly about a year and a half. No? Look at the...
Are you now investing that money into the community?
We have been from day one. And an accelerated program also for this year. Look at the credit ratings agencies. Now we've gotten multiple credit rating agencies.
Well, I want to talk about that, President, because you are making headway with the economy. The government is forecasting 4% growth. As you say, the rating agencies have upgraded the status of the Philippines, and foreign investment is coming in. Let me ask you, can you sustain this moving forward?
I think a lot of this is pent-up desire to invest in the country, but they were prevented from doing so before because it was, how should I put it, wrong governance or misgovernance made the playing field not level, made it opaque in terms of what are the actual rules.
One of your biggest exports is your workers. More than 10% of your population is shipped overseas, many of those to be domestic helpers in Hong Kong, Singapore, elsewhere in Asia, obviously the Middle East. The remittances generate $20 billion, which is something like 9% of your GDP. Obviously, this is very financially beneficial.
Jaime, I want to ask you about your company. 178 years old. It's been through dictatorships, it's been through rebellions, it's been through world wars, it's been through occupation. What, simplistically, do you think is the secret of its longevity?
More than anything, I think the company has always sought to align itself to the national goals of the country ever since its founding back in 1834. And that's made us intrinsically part, I guess, of the fabric, I guess, of the nation. We have not remained static. We've adjusted to the changing times. Change is not something that neither Fernando or us fear, and I think there's always been a very strong entrepreneurial drive, I guess, in past members of the family where they don't, I guess they didn't sit back and say, this is our business and this is the way it's going to be. No, we've kept an eye on the changing times, the economy, technology, partnerships, and tried to adjust to those changing times and be relevant, I guess, to the needs of those times. I think that's been a major element.